Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, March 5th, 2019. In this video, we'll cover two sectors. They're closely related sectors. That's why we'll hit them both: biotechs and healthcare. Some of the ETF, in these two ETFs, which I'll cover, I should say, XBI and XLV. There is some overlap in the components. So again, closely related. And one more thing to note about both healthcare and biotech sectors is there are certain sectors where there's a very tight correlation between how the components trade. GDX is one example. If you see gold rallying and the gold mining stocks rallying, GDX going up, let's say 30%, you can be all but assured probably every single component in GDX has gained. Obviously some more, some less, but they tend to be highly correlated because the price of gold drives them all. That's their bottom line to fundamentals, is the price of gold. Whereas in the biotech sector, you can have one company who has a blockbuster drug making tons of money, and all of a sudden that drug comes off patent. Maybe their pipeline dries up. Maybe they had some things in the pipeline that didn't pan out, or they have some blockbuster drugs coming in the pipeline. So again, they will be, like the stock market as a whole, subject to inflows and outflows of the sector, the ebb and flow of sentiment, bullish or bearish. So in other words, you can have some standout biotechs in a bear market that may either outperform the sector, or should, as a whole, meaning if it falls, let's say the sector drops 50%, they may only go down 10 or 20, or they could go up. So I just wanted to make that note there. The benefit to trading ETFs is, number one, diversity. One shot, you buy one security, one commission, and it's you're holding a basket of usually anywhere 30 or more stocks, so you don't have to worry about earnings, or in the case of biotechs, which I just did a write-up the other day, you don't have to worry about a blow-up when one company announces they had one of their hopeful potential blockbuster drugs and clinical trials just got shot down because people are getting sick and the FDA yanked it. So those kind of things, again, you mitigate your risk, but you also dilute your returns as well. So what I do is I like to go over the individual components within the sector, highlight some that may look bullish, some that may look bearish, and if you are inclined and you have the time, effort, and the large enough portfolio to diversify, then you may want to go that route. In other words, pick your top dozen or so within the sector that look either the most bullish or the most bearish, or maybe even both. You're hedging both ways, so some longs and shorts. Okay, so that's just a sort of a blanket generic discussion for trading any sector. Really know your sector, know what the components are. But with that being said, the biotechs, it is a very tradable sector. It's a lot like the semiconductor stocks or the gold mining stocks. It is one of the most volatile sectors. When it runs, it really runs. When it corrects sharply. So what we're going to do is start out here with the chart. This is a long-term chart. Weekly chart, so we have 10 years of price history, and what I wanted to focus on is take a look, and this sort of also plays into my outlook on the broad market. We had back here in 2015, we had a major top in the biotechs, and as you can see from top to bottom, they fell. The sector itself corrected over 50%. Of course, it's not a straight shot down, nor is it usually, just like what the broad market usually does in a major correction. You can see the waves here. I don't know if you can fit a perfect EW count, but either way, you can see the clear waves, tradable waves. So what I wanted to focus on is, let's just look at that correction back there. And we had in the initial leg down, there was a couple thrusts there, but let's just say from this point here, the top, down to this point right here, that was a 35% drop. And the one before it was just a little shy of that. So what you had? You had a strong kickback rally here, very powerful bear market rally. I have no doubt that the majority of participants, no doubt that most were caught long. And remember, sentiment was super bullish there. I'm going to get to that in a second. We were short the biotechs not far off the top, calling for a bear market in the biotechs at that time. There's the kickback rally, 35%, 34, 35%. And as you can see, bear market rally, and then the final capitulation type sell-off. So now here's the thing. This will only be known in hindsight. Was this the initial leg down in a much larger bear market? Also keep in mind where we are in the business cycle. Not to go too far off track, but it is somewhat related. This has been the longest, one of, if not the longest, economic expansions in history, and about to be the longest bull market in history. I don't think there's an economist out there that doesn't at least put us in late stage expansion mode on the business cycle. Some might even have us in early stage contraction, at least some forecasts. But again, we'll see. Maybe the records are meant to be broken. Maybe we'll go into a 12, 15-year expansion. It'll be unheard of, or at least we hadn't experienced that before, but we'll see. So point being is, if this was really a correction in an ongoing bull market, here's a larger trend. This goes back 10 years. You don't want to see what a bear market would look like in the biotechs, because again, they move, they're juiced. They, like I said, when they rally, if you bought them here by XBI, you gained 100 and 200% right there, and that's just to that peak. Of course, it kept going there, so that kind of puts it into perspective. It's a very high growth rate sector, so you want to be on the right side of the larger trend trade. Now let's talk about that real quick. Let's go to flashback to when did I post this? July 30th, 2015. Let me just go back to that chart and show you when that was. Here's the crosshairs. Go to July. There's July 24th. So we zoom in. Yep, that's it. The very week after that topped, that's when I put out that video, and saying, you can see it up here on top. This video covers used PB, IBB, which are very close to triggering. So my expectations for a drop of at least, with at least in italics, meaning at least 20%, with many of the individual biotechs poised for substantially deeper corrections. Add to that, it wasn't just a video, we also added on LABU. Now this is a great example. I'm going to digress a little bit. There's also a trading tip in here. I talk about this a lot. All I see out there, a lot of people talk about the decay, and I do too. You don't want to, for the most part, you don't want to hold leveraged ETFs for a long period of time. There is an exception, and I write about that in the FAQ page, FAQ section. Is that if you can pick a strong, fairly unidirectional trend. What I mean by unidirectional trend, well, that's obvious, one direction without a lot of kickbacks. This is a unidirectional trend. This is a unidirectional trend. This is not. This is chopping. Even though the trend was up, there's a lot of back and forth. This is where decay eats at a leveraged ETF, especially in a very volatile sector. The two worst that I know of offhand, or I can think of offhand, are LABU, LABD, the biotech 3-time leverage, and Nugget and Dust, the gold ones. Now, if you get them right, guess what? You don't just get 300% or 3 times the return on the sector. You actually do better. And again, I write about that in the FAQ page. It's all math, how it works. Read up on that. I don't want to digress anymore here explaining that. So back to that, where were we? So, we didn't milk the whole move down, but we caught a good deal of it and what we did is shorted LABU. That's the bullish ETF. So what we did there is we put both the price move to our advantage, the drop in the biotechs, and that decay worked for us. And so that way, had we been caught up, and there might have been some periods of back and forth grind, that leverage that works normally against you when you buy or go long a 3-time leverage ETF can work for you. So I'd like nothing more, and I'm wide open to the next bear market, whether we're already in the next bear market right now and this is just a rally, or it's 6, 12 months away, 18 months away. I will be looking for some of these 3-time leverage ETFs for official trade ideas when I have a pretty high degree of confidence that there may be a trend trade, a sharp leg down in the market that might last for weeks or even months, and maybe put on some of these the 3-time leverage ETFs that are prone to decay. Okay, sorry for the pause. All right, so now let's go on to the charts. I probably spent a lot more time talking about trading strategies, but again, I think that's important. Okay, so before we leave this chart, again, you can see the same, similar conditions, overbought, divergent highs, trend line breaks. Again, those are divergent highs aren't a sell signal, but when you have a divergent high and then a well-defined trend line break, that's a sell signal. And as of now, one of my favorite trend indicators is that PPO9 EMA does a pretty darn good job. This is a decade-long chart, and you can see without fail, had you just got out or shorted and then got back in long, again, it's a white line, no cross there. That's why I don't use the blue line. The white line's a slower line, so it's less likely to give you a whipsaw signal. And there's a 100% effective rate to either not capture the whole thing, but either get you short or out of your longs in a bear market. Ditto here. And all I'm saying is right now it's still saying that the trend is bearish. That does not mean that can't go up. Sometimes, and that's the problem with using long-term trend indicators, they don't get you in and out as quick as zooming down to the daily and even 60-minute charts. But I'm just pointing out that as of now, there's nothing in this chart, nothing that says that the biotechs are not in a downtrend right now. Still well below their previous highs. Trend indicator is bearish, again, from a longer term perspective. I'm not going to argue the near term and intermediate term trend, at least off the bottom, is up. And so there's different trends you have to pay attention to. All right, now we move on. Let's see here. Quick look at the daily chart. Won't spend too much time. You can, I know this is, this chart is as busy as a one-arm painter right now with all these lines. I'll flip to a cleaner board, but it's a basic wash, rinse, repeat stuff. And we hear a lot of buzz out in the blogosphere. Oh, divergences don't work. They don't work. Look, they don't work 100% of the time, but from my experience, they work at least 90% of the time. And again, you need to have them confirmed. Most people don't wait for divergences to be confirmed. They just look for indicators making higher lows or lower lows. I like the confirmation via the crossovers. And again, you can see it's all shown there. Correction. There's a divergent low, by the way. It's not just divergent highs. Divergent lows lead to rallies. Divergent high correction. Divergent high correction. Divergent high, and this was simply an extension of all those previous divergences and then the big correction. That's what I talk about, and this is what I'm looking at in the broad market too. When you have multi-month, even multi-year divergences building, you can get the little corrections in there. In fact, I put up a chart of CL this morning, crude oil, and show the little divergences building. And each of those do produce those corrections. But when you have consecutive divergences, that's just one larger divergence, and that leads to the big move. So where are we at now? Let's look at a chart that doesn't look like a Christmas tree all lit up. This is let's go to this time period here. Nope, that didn't work. Here we go. All right, so I have two trend lines. I have this one off the lows. The white line is more significant. It has more reactions. That triggered, there's your sell signal after the divergent high. And there's this potential trend line. I'll highlight it right here. Only two reactions. We did have a reaction, some reactions around it right there. You can see, yeah, that's it right there. So we're back testing that one right now. So there's something to note. And this rally has recouped quite a bit so far. It would be ideal to see the biotechs turn down very soon to keep that potential scenario that this is just a kickback rally, just like the broad markets in a more powerful bear market. So if nothing else, I think we at least have a tactical short right now, possibly a strategic short. Tactical is quick, hit and run. Think swing trading lasting days, weeks, maybe a couple months, whereas strategic is your positioning, whether you want to take, your long-term funds, get your money out of the biotechs, for example, or put on one of those shorts, like I said, LABD, or just if you don't want to hassle with decay, just short XBI or any one of the other biotech ETFs. Okay, zoom back down to a 2-year daily chart. There's that back test of that trend line. Let's take those trend lines away for a second and look at one more. Okay, I talked about the bearish engulfing candles we had on, what was it, SPY and IWM yesterday. We also had a bearish engulfing candle, and that's one of the reasons I wanted to do this video. You can see right there. Here, let me zoom back out. I'll just circle them all. You can zoom in on your own chart if you can't make it out on the video. Big old bearish engulfing candle yesterday. As long as we stay below that, I do think, it's an objective short. I can tell you this: the risk reward is very attractive. Maybe we take out that candle, and we have really no business moving above the top of it. Anything's possible. Doesn't mean we can't go above it and then reverse. But as far as a strategy, you have to pick your stop somewhere, and you short that bearish engulfing. Maybe you want to wait for a red candle today, as long as we close down below the midpoint of it or so. I still think that's a good shorting up. All the better if we get a red candle today. And again, let's go back in time and look at a few other tops here. So there was one. I can go back right here. A big old bearish engulfing right there, and that was the top. We had a little kickback rally. It stayed about to the midpoint of it, and that was the top in the biotechs until this point right here. So that's the point I'm trying to make. Sometimes you catch the runner trades. It's hard. You get kickback rallies, and there's again, you have to look at different time frames and decide how you want to trade that, and that's the hard part. But someone that's swinging for the fences, you want to hit a home run or a triple, you short something like that, like here, and you just leave your stop there until you're well profitable, and then maybe at this point, once you see that, you can see that breakdown there, then you can lower your stop some point, maybe back above that level. And just to continue on, another bearish engulfing right there. Nice bear, and look at that big drop. That's a sizable drop. Bearish engulfing right here. Oops, that was supposed to be an arrow, guys. All right, so you get the point. There, you look for those at the end of a prolonged uptrend, and this one certainly qualifies. This is the strongest uptrend that we've had in years. Oh, there's another one right there. Look at that one on that little kickback rally. Look at that massive red candle that just wiped out that doji there, and then boom, the bottom fell out. Okay, let's just now go through a handful of the top components, and I'll touch on XLV and we'll wrap it up. Here are the holdings. I have these sorted by market cap. So you can see Amgen's the largest one in XBI. It's almost $121 billion company. So we'll just look at the top handful just to give you an idea of where the sector is going. Or maybe headed, and again, maybe some individual shorting ups. I'm going to start with the weekly. If there's enough time in this video, I'll get to the daily, but I'm really trying to paint the bigger picture here. I already made the case if you want to short XBI, you had that bearish engulfing, short it, keep a stop just above the highs. Look, nothing ventured, nothing gained. You get a couple percentage loss. Just wait for the next objective entry. Or you want to wait for a little more evidence. I'm going to show you a lot of these key stocks. If you start seeing these guys break support, with conviction. Let me get a frame tool here. Let me color that different. Okay, here we go. So, you start to see this on the weekly chart, a candle that looks like that, big red, solid close below there. You know that Amgen has most likely triggered a major sell signal, because again, we're looking at weekly charts here. When I trade weeklies, I'm not looking for swing trades that are going to last a few days to a couple weeks. You're looking at trades that are going to last months, and on these stocks, they will be measured in double digits. That's about the only thing I can assure you if they play out. So divergent high there, divergent high. By the way, those numbers aren't random. They're just showing you the divergent highs. This is just one larger divergent high. So when this sucker breaks, I'm not looking for a 15 to 20% drop. I'm probably looking for a drop all the way down. I'll show you right now, just eyeballing this chart. Right around here, come in, test somewhere in these lows. That would, from current levels, that would be a drop of about 26%, and that would again be a minimum target right there. Swing, longer term swing or short trend target for Amgen. Moving on, ABBV, one of the better looking ones. Somebody inquired today in the trading room about there's a little pennant here, a little symmetrical triangle. Maybe short that on a downside break, but have to respect an upside break. But potential divergence forming, potential because these indicators, the PPO at least, has not made a bullish cross. It's heading lower, and if it continues lower, it'll burn through the divergence here. What I think will happen to this stock, kickback rallies aside, I think it'll continue to work its way down in this wedge to that $70 level, whether it has a little more upside first or not. But here's one that I would personally, I don't think there's enough meat on the bone. I think it does go to 70, and actually I take that back because it's almost $80 a share. That's better. What is that, 12% or so gain on the short side? But again, longer term, could be setting up bullish, but it may take a while. We could still have divergence, at least on the RSI, if it gets down there. I just wanted to show you the weekly chart. Oh, and it took out this trend line here, breakdown back test. So you can see really conflicting, well, not conflicting, but bearish technicals. There's a breakdown, impulsive move, back test of the trend line, and it's been moving lower since. And then you have an uptrend line here to watch, and I guess that's what I'm trying to say is, sooner or later maybe hits bottoms out or breaks out above here, and that would be a buy signal. But until now, the trend is down. Make no mistake about it. Any long on this stock is a counter trend trade. There is no mistaking that. That is your trend. That is the definition of a downtrend. Prices making lower highs and lower lows. So divergences and all that kind of stuff is just potential bullish developments. GILD. Gilead's at key support right now, about 63.50 give or take. You can see that support level there. I don't think I really need to harp on that too much. A lot of reactions there. So basically you are in this very large, again we're talking the long-term weekly time frame. This is a large descending triangle pattern. It can break either way. Upside break brings us up to 86. Downside break, no bueno for Gilead. BIIB, Biogen IDEC, dead money. I'm not going to comment on this stock. It's been a dead money trade for years. I don't see anything in the chart. When you have this long-term sideways trading range, the indicators flop around. They're useless. Don't try to extract. Don't squeeze water from a rock or try to squeeze blood from a stone. Don't use indicators, moving averages when a stock is in this sloppy range. You wait for a definitive break to the upside or downside, and chances are that will define your next major trend. CELG, Celgene, big bullish divergent low. I believe I pointed that one out on the site back then. Strong move up. You can see this is how bullish divergences work, and this is how bearish divergences work. Most people just don't have the patience to really trade off these or wait for the sell signals to trigger on these long-term charts. But when you see that, again, that doesn't look like much, but I'm sure if I measured that out, that's probably a 30% or more drop. Yeah, you can see from 140 down to under 100, from here to right that quick from that first divergent high, pushed up again, extended the divergences as what I talked about earlier. Larger the divergences, typically, the larger the drop. And so we had a pretty powerful divergent low, but we rallied right back to, or at least not all the way, but very close to resistance. Major resistance level there. So it's objective to short a bounce back to about the 95-ish level, 94. Also objective if it long if it can power on through there, but I wouldn't chase it. It's quite overbought. Not extremely overbought on the weekly, but it had a heck of a run to get there, and looks like it's consolidating. Probably best to just stand aside that one for a while. All right, let's move on to the XLV if I can get to that right now. Yeah, just added a few lines. They popped out to me when I looked at this chart. There was your uptrend line. Again, divergent high. Wash, rinse, repeat stuff. Long-term time frames. Again, you have to be patient, wait for the right signals. But there was your divergent high. From there, VRTX, Vertex fell top to bottom about 50%. So again, it doesn't look like a lot when you look at this chart. That's a 50% drop. The stock got wiped out in half, and that was just a correction during an ongoing bull market. And again, it's wash, rinse, repeat stuff. Divergent high, 50% drop. Divergent low, and again, try to put in perspective just how much these things can go if you get a trend. 165%. And now we've come full circle. It's almost confirmed. Need to see that PPO turn down, make a bearish cross, and we'll have to hone down, see if we can get some sell signals on the daily and 60-minute charts. And my guess is the minimum target is to come back down. Here's you can see a price channel this one's trading in. So this is TA 101 or trading 101. If you're in a price channel, go short at the top or sell your longs. Go long at the bottom or cover your shorts. And or wait for a breakout down below the wedge or the channel or out of the channel. But as of now, that's been the strategy or the MO on this one. Long short, long short, long short, that kind of stuff. And again, it's these divergences here, they're not yet confirmed, that indicate that the next that sooner or later this trend will end and we'll get a downside break. And if we do, that kind of puts into perspective that, hey, you may want to hold that short for a while because we had multi-month, almost 2-year-long divergences building, just like we had back here at this point. That's the total divergence right there. I should have covered that. And there was your 50% drop. So if you want to hit some, again, triples and home runs, this is the sector to do it. All right, XLV, just hit that chart again. I said they're very related industry. There's some overlaps and overlap in some of these names. Some of the pharmaceutical companies also are quasi biotechs or vice versa. They may manufacture their own drugs or engineer them. There's XLV from I jump back to what's this, about a 12-year chart history, 2009. This captures the entire bull market. It's just a nice clean trend line to me. This is what I call a primary bull market uptrend line. Plenty of reactions to make it a valid trend line, not just some arbitrary line that I'm placing there. A lot of things along the way. And whether I saw this type of wedge on a 60-minute chart, a daily chart, or a weekly, the technicals all tend to play out the same. This is simply a breakdown, and it was impulsive, didn't just limp through there. That confirmed the validity of the breakdown, and now we're back testing the wedge from below. So TA 101 says you either short a breakdown of a trend line or a wedge, and or add or reshort or initiate a new short on a back test with a stop somewhat above. Yes, the problem with back tests is they can continue to back test, so you obviously want to hone down your entries and exits using the daily and 60-minute charts. This weekly just kind of puts things in the bigger perspective, the bigger picture, and shows, hey, if this pattern plays out, this was a multi-year divergent high, we broke down a back test, that's not it. That's just the first leg down and a much larger correction to come, probably down here at least to that, probably somewhere in those lows were around $65, and that's from 92 right now. Be a pretty good drop. Daily chart, kind of a mess as far I have another board with trend lines there all over the place. You can see divergent highs and that's some things that I've circled. High-level bearish PPO crossovers, that's what I have circled here. I also had the divergent high recently. By the way, this sucker has about a 15% weighting in the S&P 500, so it matters where this one goes. That back there was a beautiful sell signal. Let's just go to a different clean board here. Yeah, look at that big breakaway candle with that doji type candle. Hanging man, boom. And just a very impulsive reversal. Here's your little bearish engulfing right there. We put another doji, 1, 2, 3, gap down. That's also an island cluster top. Love to see those patterns. They don't work out every time, but when they do, they are major topping patterns. You had 3 candles separated by a gap on each side, so that's your island or island cluster, we call it. Bearish engulfing to end the island there, to engulf that previous candle. And that's what we had the other day, a bearish engulfing, and so far we're still well down below that. So yeah, like I said, PPOs crossed over recently, and we may get a correction here in the healthcare stocks. And of course, if not, same story, you cover there. I'm only going to look at the weeklies right now because the video's about done. I'm going to wrap it up here in a second. Just cover a few of the XLV components. J&J, and this is why I'm not yet adding this, and I may throw it out there soon. But there's still some stocks, and it's just like the broad market too. When I look at the broad market, some indicators and key stocks still above primary long-term support. In fact, just came down and tested it. We did have a big divergent high. So from my read on the chart, these divergences right here tell me it's only a matter of time before this major bull market trend line goes and we have a much deeper correction. Back here we had a smaller divergent high, and that still led to a much larger correction than this last drop. That one just took us really back to the trend line. There was a drop through there, intraday little flash crash in J&J, but it closed the day or the week, this is a weekly, back above. And so that's the level to watch. And again, if you're really trying to determine, okay, when have we entered a bear market, you start seeing a lot of these market leading stocks like this break these long-term trend lines with conviction. At that point, I think you can say it's safe to say that the bull market is over. But as I'm, the reason I'm doing this video, there's still some that are above trend line, and you can buy those on pullbacks to those trend lines, Here's PFE, Pfizer, a little small divergent high on this weekly chart. I think it comes back down to 37.42 plus that intersecting uptrend line right there. That gives us about a 14% drop on Pfizer. UNH I highlighted recently. Look at that bull market, beautiful, very well defined long-term bull market uptrend line, culminating with a divergent high recently, and it's testing that on the daily chart. I just pointed out when I posted this one, we had some beautiful price action. There was a, come back to that 2-day period chart. We had a trend line off also. This is not that, or could be the same trend line. No, it's not. It's a different trend line off that reaction low in 2015. Lots of clean reactions. Pulsar breakdown, back test. See, this is how technical analysis, when it plays out to a T, this is what it looks like. Impulsive breakdown of a well-defined trend line following a divergent high right here. Back test, and then a rollover. It took a little while, but it rolled over, and then finally when people realized, hey, that back test was successful, we did not gain the trend line, rolled back over, impulsive selling. And as I said, I think this is where it goes. Now, if this daily chart hits the target that I'm looking at here, this target zone, that will have taken us down below the weekly support on the weekly trend line, which is more significant, and then opens the door for a much larger move down. You know what, I'm going to wrap it up here. I'm at the 31-minute mark now as I speak, and that's long enough. If any stand out, I'll finish combing through. I have not looked at each and every component. I just wanted to go over the handful of the top components and to give a kind of a broad overview of the sector. And again, if any individual stocks stand out, both on the long and short side. I am looking for longs, guys. I'm trying. I just won't force a trade. If I'm not comfortable with it, doesn't matter what the trend is or how many I miss. I'm not going to put a trade out there that I don't, think that I wouldn't take personally, or I don't think is looks good, compelling from a risk-reward perspective. So, but with that being said, when I come across something, and every now and then I do, and maybe a commodity, but I'm also looking for individual stocks right now, especially the growth and income stocks. I'm looking to start adding some of those back to that category for trade ideas. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.